Hey, what's up, all my realtor friends? Patrick Langhand's Cross Country Mortgage. It's your weekly mortgage lending update. We're going to talk about the Fed lowering rates and what that did to mortgage rates. We're going to talk about new loan limits for conventional loans. They have gone up. And then I got two investor classes coming up. Great classes for realtors, but also welcome to bring your clients so they can learn about becoming a real estate investor. What are the benefits? What are the tax benefits? How do you build wealth? So we'll talk about those things. Fed lowered rates last week 0.25%. And what happened to mortgage rates? They went up. They're up about 0.25%. So remember, the Fed funds rate, that rate that you hear the government's changing, is not a direct correlation to where mortgage rates are at. It's a different rate that they're changing. Now, it does, in the long run, tend to have downstream effects on mortgages, but it's not a direct impact on mortgages. So they lowered the rate 0.25%. Mortgage rates went up about 0.25%, but we're still close to lows for the year. We kind of bottomed out around 6.125. That was before the Fed changed the rate. After they changed the rate, rates have gone up about 0.25%. So we're still in the low sixes, still lower than the highs from January, where we were at 7.25. So still low rates for the year. Good opportunities out there for buyers. But I think the long-term outlook is we will see these rates come down. It'll just take a little bit more time. So that's what we're looking at on rates. Fannie Mae and Freddie Mac. So they adjust the loan limits every year. And as a company, we try and predict where they're going to be. And right now we're thinking around $819,000 would be the max conforming loan amount. Currently, it's $806,500 is the max loan amount. So it's gone up about $13K. We can lend on that higher loan amount now, even though it hasn't been officially released by Fannie Mae and Freddie Mac. So conforming loan amount going up a little bit. Remember, that's the limit that Fannie Mae and Freddie Mac set as far as the max loan amount you can do. And then each county has a little bit higher. So for the Denver area, we'll probably see a little bit higher max loan amount available. But right now we are lending up to $819,000 nationwide on a conforming Fannie Mae Freddie Mac loan amount. I got two classes coming up. They're both around investing in real estate. So one will be a short-term rental class. So how do you invest in a short-term rental? How do you buy a vacation rental and not only make money or have someone else help you pay your mortgage on your vacation home, but what are the tax benefits? What are the costs? What are the expenses? What are the downsides? So we'll cover everything you need to know about short-term rentals. But one of the best things about short-term rental properties, if you're using them as an investment property, you can claim any real estate losses. Some of those are paper losses, not actual losses to your checking account. You can claim those as deductions and take that off your regular income. So if you are a W-2 employee and you're looking for additional deductions to save money on your taxes, a vacation home that you short-term rent is a great way to get some additional tax benefits. So check out that class. That's a 1-hour Zoom webinar. I also have a live in-person investor class. So that's going to cover all types of investing in real estate. How to buy it, how to finance it, how to qualify, what are the tax benefits, how to manage it. That's coming up. That's going to be a live event in November. So I have a webinar on Zoom in October about short-term rental investment. And then in October, I'm going to have a live event as part of our Smart Home Buyer series talking all about investment properties and how to invest in real estate. So check out those classes, sign up. They're great for you or your clients. We'd love to see you there. And if you have questions, let me know. Talk to you later. Have a great weekend.